Welcome to the Pay Me Strategy. I'm Neil George, and thank you for subscribing and reading. This month, we're focusing on partnerships in the lead article. Partnerships are an ideal source for generating high income to grow your retirement wealth, as well as to generate a lot of income to live a rich and enjoyable retirement. Now, partnerships don't come without some complexity, and therefore there are two parts of the equation that I deal with. The first deals with the structure, how they're passed through, some of the major tax savings that come from owning partnerships, effectively deferring taxes or potentially eliminating income taxes on the high dividends that are paid by the quality partnerships. In addition, the second part is just as crucial, is understanding that just because a partnership has a high dividend, and perhaps even has a history of paying a high dividend, doesn't mean it's going to be able to continue to do so. You need to put them through a stress test. In the lead article, I go through the mechanics of how I've been doing that for years, and I separate the good ones from the bad ones. In addition, as we've had some partnerships within the Pay Me Strategy portfolio, both in the cash cows and the nibblers, I'm adding some of these new ones I'm discussing in the lead article into the nibblers that eventually might make their way into the cash cows. In addition, one of the partnerships, Enterprise Products, is now on watch. We've seen some significant price gains, and therefore some of the valuation measures that I use are giving me some concern. This watch does not mean sell. It means simply not to buy anymore, not to sell, while I'm doing some initial research and looking at the company a bit more specifically on some of the concerns I have as far as some of the valuation measures. Now, once you've covered the main article, then go into the portfolio articles that discuss each part of the Pay Me strategy. In the cash cows, I address one of the major concerns that many of you have been having involving the interest rates going up in the U.S. and how that might impact some of our mini bonds and other income investments. Well, the key thing to remember is that the mini bonds do not move in lockstep with U.S. Treasury rates. And in fact, if you look at the run-up in interest rates in the U.S. government bonds this year, that actually has gone, mini bonds have done very well, while U.S. government bonds have actually lost some money. And again, historically, this has been the case over and over again. In the cash cow portfolio discussion, I go through the rationale and show you the actual data that proves my point. In addition, I also go through my analysis of our closed-end global bond funds and show how and why they again will do quite well, even if and or when U.S. government bonds go up in yield, down in price. After going through the cash cows, move on to the long haulers. You'll see my discussion of what's been occurring with some major changes and major challenges we have in the U.S. and the global economies concerning how we gain our energy, different types of energies, as well as some of the other threats, and how our long hauler companies have been making and will continue to make profits from addressing some of these. Then the nibblers, the farm team. I mentioned earlier that we've made some new additions of some partnerships that are in the nibblers. They're generating some high dividends and have been stress tested by me. I think you'll find them to be very good new additions for our portfolio, and I believe they very well might become cash cows eventually. In addition, in the nibblers, I also discussed some of our newer entrants in the nibblers and the portfolio in the form of some of our preferred real estate companies. High dividends with the security of being a preferred, these have been performing quite well, actually very well in a very short period of time, and therefore I've made some adjustments to the prices on those. And again, by going through the whole portfolio, you'll note that I've made an adjustment for each and every stock within the portfolio, looked at all the pricing, looked at how the market's treating them, and I've updated all of my guidance and my advice for buy up to or buy under for each one. So with that, enjoy the articles. We're doing quite well. If you look at how these are performing, they continue to pay us very ample dividends. We're seeing some price appreciation across the board, with only one major exception, Monsanto, that I discussed in the long haulers. And so forth, I believe that the Pay Me strategy is doing its job to help build your retirement wealth, as well as for those that are retired, generating ample cash flow so you can further and better enjoy your retirement. Again, thank you for subscribing. Thank you for reading. I'm Neil George for the Pay Me Strategy.